Well, g'day everyone. Welcome. Hey Johnny.
Well, g'day everyone.
Oops.
Welcome.
Sorry, so obviously I'm coming through. Yeah, Mark's superhero entry, Johnny. Very good. Welcome everyone. Welcome to Workshop Wednesday. So, Piosu Shill, again, HR Alpha, Dello, M for Oak, Brandon, Win, Java, Mr. Badger, very good. Wizard, again, no, Bruce, Sammy, and anyone else I've forgotten. So, so welcome everyone. Welcome those of you that are new as well. If this is your first workshop, then I hope you find it good value, but more so I hope you're able to take something away that you can apply to your trading immediately, straight away. Hey Tony, Nigel, Tara, Ahmed, Bluefin, Trade to Travel. Very good. So let's jump in, folks. So tonight's topic is pre-breakout accumulation setups. Fire sword. There we go. Sorry, forgot which button to push there. So, folks, in the Asia session reviews, g'day Filippo, and London session that I do, in the trades that we take, we use the higher time frame. This is the weekly chart. We use a trading time frame to give us good context. So that's the daily. And then we drill down to a lower time frame chart to find entry setups. And that's usually 4-hour or a 60-minute chart. So this is a swing style of trading. So let's face it, in Asia, we don't get a lot of movement from the majority of the pairs. So we get the opportunity to analyze a lot of charts and wait for setups. So there's basically two types of setups. There's three, but there's mainly two types. One is your breakout style. The second one is pullback, various forms of pullback. Now the third one, anyone want to have a guess what the third one is? So we've got pullbacks and we've got breakouts. What's the third one? So higher time frame, trading time frame, lower time frame, PO Sushil, range, range, consolidation, rebounds. No, it's actually a reversal. Okay. Now, not many people know that, reversal. So what can that take the shape of? It can be a breakout failure, all right? Can also be, some of my favourite trades, equity trades, is a climactic, right? But I'm looking for the reversal, but we won't go into that. But there's actually three. So, and in amongst those reversal type trades, there's a few different types, of course, all right? There's not many very big news, says Wizard Alvin. So, the breakout type trade is the easier one because price comes into a level. It may come in once and retest it, or it may just come in once and it sits there and gives us some sort of pattern, right? So in other words, it hasn't just hit this major resistance, let's call this, and just got it been rejected as a reversal. It's now sitting here creating some sort of accumulation, okay? So these can take days to form. Right? And those of you that know, we produce a watch list. Here it is here. I'll show you. We produce a watch list. And some of these can take days to either trigger or not at all. They just fall away. The reason I prefer these for the type of swing trading is because we get time to get in. We get a specific level to take the trade at. Okay? So, what we're looking for is when price hits a level, what are some of these patterns? Now, the workshop is titled Pre-Breakout, but what I'm going to include is these. Right? So it's through the level, and also these, where it's on top of the level. All right? You happy with that? All right. So, different locations. Right? I don't like trades that come in and they form under what I believe is a key level, because something else is acting on it, and there's a high probability it'll go into the key level and get rejected. So, not looking at those. Okay? Right. So, we're looking at breakouts. Pre-accumulation breakouts. So, let's have a look at a couple of patterns for starters. So, what sort of pattern have we got here? Let's describe some of these patterns. All right, so trade to travel says A, B, C. Yep. So can also be called the zigzag. Can also be called just a common falling flag. Okay. A, B, C, breaking through B. Yep, falling flag. That's it. Yeah, okay, so Filippo, they're all P patterns. Ah, you're jumping ahead. Alright, so Filippo's mentioned this, the P pattern, where price comes in and it creates whatever pattern we like in here. Well, it doesn't go backwards. Creates whatever pattern we like. That's all right, Filippo. No, you're right, you're on the ball. Right, so VJ has said, simply it's a correction. Yes, absolutely. All right. So these can take the shape of many different forms. All right. So they are just simply corrections. All right. So here we've just got our AB shallow C or triangle. All right. Now this can be a 5 wave as well. Here we've got a complex correction. Right? Oops, WXY. But there's still some form of corrective. Now, whoever said the corrective is correct, because what they've also picked up on is the lead in price action. Right? This is critical. All right. Now, what about this? What about this? So, all right. So it's the same, isn't it? Right? Little head and shoulders against resistance. ABC 1, 2 if you're into Elliott. Davis box, or simply a rectangle, okay, with a shakeout both sides. Very good, everyone's listening. So, the one common thing though, right, it does whatever it needs to do in here, and then it moves out. So really, those patterns that we've described, they really are just continuation patterns, aren't they? We can come up with any sort of fancy name for it or look-alike, right? It's just a continuation pattern, isn't it? Yeah, that's a good one. True, that's one of my favourite. Exactly. Trade to Travel says they're all variations on a theme. One of the key things, of course, being a continuation, we need some sort of trending price action beforehand. All right? And as Filippo has said, a lot of them I just simply call the P pattern. Okay? Prices trends up, nice big move, and then we've just got this structure through here. It's just a P pattern. Or it's part of market profile in terms of the distribution. In other words, majority of the price ends up in this region here, the bell curve. All right? There are variations, like this one and like this one. All right? But all we need to know is they are continuation patterns led by this. Okay? So, now that we've established, they're basically just continuation patterns. So, let's take our garden variety ABC. So we've established an uptrending environment. We've established now, we've also got some sort of pattern in here, haven't we? So we've described our setup. We say this is looking pretty good. So we're giving this an A grade rating. So it's an A grade trade. We are almost good to go. What's the next thing that is just as important as this? So we've got our A grade setup. We've got our impulsive move or our trending price action into it. What is just as important as our setup now? Mr. Badger says, got a confession to make. Still can't visually tell the difference between accumulation and distribution. That in itself is a whole workshop. So, we've got our setup. Momentum, says Brandon. Yeah, not quite. Bluefin says a breakout pullback. Shrewd says a break of top. Yeah. But where? But a break and retest? No. Let me give you a hint. Now, I'm not going to exit the trade. I'm not going to exit the webinar. Let me give you a hint. What do we finish on? So what's just as important as the setup? Yeah, Shrewd's got it. Structure or the context in which where this appears. Okay? Where this setup appears. Can we have this setup? Yes, Mr. Badger. Where it appears. It could be a level, it could be something, but what is over here? Have we got previous anchor? Would that be important? Absolutely. Could it be yes, Davo, very good. Could this be just plain old resistance here? It could be. All right. So where this appears is all important. Can it appear just in the middle of nowhere? It can, but chances are there's going to be a technical level here somewhere that it's respecting. All right? So even down to a large ABC right here at B. Is that an important level? Absolutely. Right? Anyone can show you a setup. It's where this setup is appearing that is equally as important. The importance of context, folks. So, with that in mind, I'm going to run a presentation for you. Where we're going to have a look at the context and where they appear. So bear with me, folks, while I just start it up. Right, we're back. So, typical contextual locations for high probability breakout trades. Test of resistance and support. We saw a couple of those today. Aussie, Singapore, and a couple of others. What else? From a range. This could be important, couldn't it? So we've got, no, it's not working for me. Let's try the pen. There we go. So we've got a big massive range. Price is sitting there. Right, that is basically our continuation pattern, but at the top of the range. All right? Yeah, sideways channel, large rectangle, Davis box. Now, generally also, think of it this way, folks. Think of what's behind now. Think of what's behind these continuation patterns. So we're going to go a little deeper. What is a continuation pattern? Well, what does it allow for in terms of buyers and sellers? Yeah, trade to travel. It's allowing for accumulation, absolutely, provided this is not too deep and strong. It's allowing for reaccumulation, isn't it? So you imagine all the bigger players. They're buying in here, buying in here. We've got a nice steady trend. They're buying through here. So there's some profit taking in this area, isn't there? Now, if we had excessive supply come in, it's not going to look like a continuation pattern, is it? Or it's not going to effectively be accumulation, is it? We'll probably get something more like this. All right, see the difference? We've got a strong move here, strong move here. Evidence of supply coming in. So what's this allowing for is this supply, if we're talking long, to be soaked up at a level, isn't it? Now, what is also supply? It's those that have been long here selling. But it's also those that have opened new shorts. So that's supply coming in. But because we've got basically a continuation pattern, the buyers are supporting price. So just remember that premise. When you see a setup at a key level, are buyers supporting price? Are they able to overcome supply? Does this look like they're overcoming supply? Not at all. We've got an anchor break, sharp moves. Well, Davo, light bulb went off. Bing. Think of it that way. Don't think of, oh, it's a pattern. Right? Think of it as, is supply able to be absorbed and are buyers able to soak up supply sufficiently to hold price as accumulation or as a continuation pattern? Because it will take the shape of it'll take the form, or it'll take the shape of many different forms. Okay? Bruce, what's the difference between support and resistance and supply and demand? Support and resistance where price has previously been. Okay? It doesn't. Now, you can get supply come in at resistance. Right? That's what creates this pattern, isn't it? Supplies come in, but what's happening? Who's winning the battle? All right? Who's winning the battle in these cases? Think of it that way. Don't think of it as patterns. Think of it more as who's winning the battle. We've got a level through here. Price is sitting here. Well, ultimately, who's winning the battle here? Overall. Considering this, while we're in it, it's kind of nobody, is it? But the fact that it's not selling off and it's getting held at this level, the buyers are really winning the battle in terms of supporting price, aren't they? All right. Everyone's gone quiet. Is that a bit deep? Maybe. All right. So let's just have a look. Try and think of it not as a pattern. Think of the order flow that's creating that pattern, folks. All right. The pattern is just the result of that, basically the sentiment coming in. But it's the result of, in our cases here, supply being soaked up and price holding at a level. All right? So, typical contextual locations from a range. What else? A test of a major technical level or a cluster. So, price pulls up and it just pulls in here for some reason. There's nothing obvious in here. Chances are we've got some technical level across here that's holding it. All right? Or maybe a high agreement zone. Maybe a cluster of technical levels holding price. All right? That's what that means. Where else? Classic cut with handle. All right? We all know those and like those. Whoops. So the classic cut with handle. Price pulls up, retests. We get the handle coming here. Well, what's the handle basically? It's accumulation, isn't it? It's testing. It's not selling off hard, so it's actually soaking up supply. So, with trend. Cut with handles. Counter trend at the trend anchor. These. We'd have a little one inside it. See this? So here's our trend anchor right here. All right. Where else? Basing cut with handle. It's the opposite, isn't it? Really? It's created we've got a base through here. Can it also be part of head and shoulders? Absolutely. What else? Last trend anchor, we just did that. From a basing structure we did at B of an ABC. We did that too. That's this one. Key area. Last short-term trend anchor of a complex pullback. Oops. Sorry. So so here it is here. Double zigzag. So let's say our uptrend anchor or trend change point is here. This very short-term downtrend or corrective downtrend, where's the anchor for it? It's right here. So in around here. It's trying to change trend and move back. That's what that means. But really, any key level. All right, let's have a look at a few. Here's the trend anchor. Here's B wave. Here's the complex pullback. So let's have a look at a few examples. A few examples from previous workshops. But there's some new ones in here. So let's have a look. Trend. Basing structure. Tested this level. Pull back to the 20. That's good enough. So there's a single leg pullback. What's the level? 38.2 of this, obviously this big range. A technical level. Look at the result. So this whole structure, it's not bearish, is it? When you look at it straight off, it's not bearish, is it? All right. Let's have a look at another one. Here we go. A, B, C. Through the level. Here's another one. Yeah, these charts are a mixture of Forex, indices, and stocks. So you will see the difference. Slight variations, you'll see the difference. So what else have we got here? Trending price action, big choppy corrective, V reversal. Now look at this here. Impulsive leg. Sideways, getting very tight. Look at the bars. Small battle bar, shakeout. All the while holding the 20 period. All right? Look at the result. Think of this as like a coiled spring. All right? And look at the low volume in here. All right? Often we want to see low volume to tell us that the sellers have given up. Let's face it, look, we've got a push, push down on reasonable volume, low volume. Another push up here. Look at this in here. All right, there's hardly anything. And in fact, one of these, which I dare say is the hammer, is on high volume. All right? Peter, do I trade individual stocks, and what's the main difference between them and Forex in terms of movement? Did you make more income trading stocks or Forex? I do trade individual stocks, and when the equity markets are conducive, I will add more weight to stock trading. When stock trading is not conducive, I'll add more weight to Forex, but I trade both usually all the time, okay? The main difference between stocks is stocks will be pushed about by the main market. So you could wake up and we've had the S&P 500 just decides to have a day where supply is coming in. Your stock could gap against you, okay? Forex is a bit more of a 24-hour market, so they do have their various nuances, all right? You'll see it. We'll see a few in here, all right? So, low volume in between. Sellers have given up. Then we've got high volume coming in here. This is pretty good. And, of course, you see the result. It's pretty good. All right. Oh, there you go. High volume. All right. Here's one from a base. See this inside? Push up, A, B, C. Little test here first. Too sharp. Pull back to the 20 the whole time. See it getting tight through here? There's our entry. So here's a consolidation before the breakout. Hasn't even hit the high. This is a base. So this is just a range, really, isn't it? Here's another one. Here's a stock. So you can see is a 60-minute chart. The big cup. We've got A, B, C through here. Consolidation in here. Away we go. Oh, okay, sorry, can't see the cursor. There we go. Big cup. There we go. Got the big cup through here. A, B, C. Push. Very small consolidation. 20 period, 9 period, squeezing, bang, but look. Push. Inside day. Push. All right. See the volume? Now see the volume coming in here? On this day. Goes a little bit quieter, but it's still there. So we actually gap down here. See this? Gap down. That's the difference with equities, folks. Thanks, Mr. Badger. There's plenty more to come. How are we going for time? So, here's one. A, B, C. Right here. Pull back to the 10. Look at the result. Look at the price action before. When we go through the slides, folks, pay attention to the context, for starters, and pay attention to the lead-in price action, please. Okay? Not just the setup. Have a look at the context. All right? Can we do that? So, there it is right there. So, entry right here. Pretty good. Look at this one. Look at how blocky price is. This is a stock. But look at the same. Push. Big base. V reversal. Accumulation. Coiling. Back to the 20. Bang. No, Dave. I don't wait for a 50% retrace. I'm in. As soon as the breakout happens. Look. You'd miss it. See this? Look, here's another mini one right here. Here's one inside. A, B, shallow C. Look, right at B wave. See there? This is a stock. This is a stock. Look at how gappy it is. A, B, C. Look at the very tiny accumulation in here. Look at the result. Here's another one. Now, here's with price above. So what do we got? This is Orica. Resistance. Base. See the base through here? Push. Gap up. So here's the trap. Look, test of supply. Pull back. Bit of a shakeout. Now the real move happens. You see that? CAD yen, 4 hour. Level through here. Push. Too sharp. Consolidation. Shake both sides. See it here? Here's the 60 minute. See the shakeout both sides? Was this on news? Probably. But look at the levels that they took out. Did they do this on purpose? I'm guessing so. Right? So V reversal then. Sideways. Bang. Straight out. Right? So this is the same. So the breakout through the level. Notice here the retest as well. REA group. Look. Breakout. Test, shake out, away we go. So here it is zoomed in. So let's have a look. High volume on the shakeout. Pull back, shakeout low, also high volume. Then look at the volume. Look where the volume comes in, right here. Now, who asked the question before? How do you tell whether it's accumulation or not? The difference? Green volume inside the accumulation, right? There's something that most people don't know. Weekly chart, look at this, right? So AMA group, sharp move, but tail in here, topping tail. Let's zoom in to what that looked like on the daily. See this here? Look at the low volume here. Sellers can't really do much. Look at the green volume coming out. All right? Here is that example already, even before it breaks. See this? So those of you that are stock traders, this is gold. All right. Aussie Swiss. Level through here. Cut with handle. Look, push into it. Very sharp. Wouldn't take that. Failure. Back. Shakes out to the 20. Another push. There's our entry. See the difference? Doesn't take much. You don't need much. You just need to see evidence of what's going on. Supply being soaked up through here. A test, supply being soaked up, push back up, outside engulfing. We've learned about those the last couple of weeks. What's not to like about this? Here's one of our recent ones, dollar yen. A, B, C. It's actually WXY. Yes, WXY. So B or X right here. See the first test? So here's our test of supply. Shakeout through the swing. Consolidation sideways push and a hold. So if you missed the entry through here, you could have taken it through here. Palladium. Push. So we've got our big sloppy corrective. C wave with a shakeout. Impulsive. Into the zone. It's too sharp. Supply coming in. Straight back with a bullish engulfing. Away we go. That's good enough. Classic cut with handle. That was one. That was one of our trades. Palladium again. Base or the cup. Too sharp. Pull back. So that would have been a shakeout in itself. See how far away from the 20 it was? This little structure in itself is the accumulation. All right. Yeah, Davo. See how spiky this is? But look, holds the 20. Look at the result. We've taken a few of these. Dollar Thai baht. Remember this one. Now look at this. Big push. Here's the anchor. So we'd actually broken trend on the 4 hour. And then we had this horrible structure. Now you think to yourself, oh man, how would you ever trade that? Well, you don't. You wait for it to approach the boundary. See it here? So push, consolidation in here. So let's switch to the 1 hour. Look at the consolidation. It looks a lot like this, but right at the key level. So push, down, wild price action back to the 20. We put our order just under, so we were taken in very small, but look at the result. Okay? Dollar Thai baht. Here's another one in play. V reversal. All right. Sitting here, 1, 2, 3. Gains fourth touch rule in play. Here's another one. Right, if you got taken in there, you'd be okay. You'd still be safe. All right. Look at the high volume red. Couldn't do anything, could it? Look at these bars through here. High volume. High volume indecision bars. Still green though. Do you think something was going on there before the break? Absolutely. Look at this one. Monthly chart. Who trades a monthly? Well, I don't. But when I see this pattern, I'm getting ready in here. Look. Massive range. 38.2. Do you think it's respecting that? You think it's respecting the 38.2? See it here? In this one, what are we talking? 2013? 2019? For 6 years, it's respecting the 38.2. Right, the very first retracement level out of a big push. So, and not only that, it's to the cent. Right? So, let me ask you this. Is this Fibonacci level respected? Has this been respected? That level to the cent been respected? Absolutely. So should we take notice of some of these? Well, I do. Okay. This proves to me that it absolutely works. I see this in my work day in, day out. So we can call it whatever we want. These levels get respected time and time again. So here are big examples, folks. Enormous example. Yeah, good question, Wizard. Wizard says, what defines red volume as opposed to green volume? The chart. Look, if it's a green bar, it's green volume. So what defines a green bar? Right? An up bar. Bullish candle. It's pretty easy, wasn't it? All right, so here's a level. Big base. It's too sharp a push. So now I've got a little Davis box or a rectangle. Bang, that's good enough. Try and look through price and just look at the swings, folks. as well. Look. But the bigger red volume small bar. What does that tell us, Dave? What Dave's referring to is this. Big, massive volume, small bar. Yes, Mr. Badger. So it means that the suppliers really haven't been able to do anything, have they? All right. However, just be careful with stocks. This could be options expiry. You'll get big days like that as well. Right? That's not, because you got a gap. That could have been options expiry. But people could have just, this whole base through here, seeing a bit of weakness above the breakout level, thinking it's a breakout failure. There's two of them. Look. The sellers have had a good attempt, haven't they? Were the sellers attempting to create the false break and they got caught themselves? Maybe. All right. So now, who asked the Davis box an example of price acceptance? Yeah, it is Mr. Badger. Price acceptance was actually here. All right, if that was an anchor. All right. Here's a 20 period here. Pretty good. All right, here's another one. Look. Push. Look at all the small candles. Then we get a big candle. All right. Oh, but there's a lot of reds here, Mark. So what? What's been the effect? Nothing. Yes, there is two, Russell. Yeah, that's it. Yeah, very good observation. So here's our rising 3 or our Russell 3 as an igniting pattern. Beautiful. Right under resistance. Use ignite to move this pattern. There it is. Thanks, Russell. Right. Look at what happened with price after that. Kind of sat inside the lead out bar, didn't it? Tree hawk. This is not just Forex, folks. All right, look at this one. Base. Look at this here. Pretty good. All right. There's my trade review. There's my trades. In here, scale out here, another scale out, break even exit right here. Right. So some of these are my actual trades. You can see the dates. All right. Beautiful trade. They should just pop like that. That's a stock. Forex. Here's our level. Had an attempt here, so you actually could have taken that one. Could have been one of the ones that actually did fail. One of the ones, the proper ones, that actually failed. But look at the result. So shake out, push, another push through the high, too sharp, shake out the other side. Now look at this. Do you think it was ready to go then? Look. What if we remove this? Would you take that? Yes. Huh? Look at this one. Too sharp. Squeezing. Look at this here. Final shake. And we've called this pattern here the MFS. All right. We've lovingly called that after Shrewd. Shrewd Move, one of the members. The MFS. It's a shakeout, but it's kind of a middle finger shakeout. In other words, they're giving us the finger, aren't they? They're shaking us out. They're saying, take that. Okay? So also, those of you that'll know, also we've got a bullish outside engulfing bar. All right? Right here. See this? And what else, folks? What else is this pattern? So here, price goes down, 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 straight back. Or price, one bar goes down, and then straight back. What is it? Yes, the bullish 180 degree. Okay? So look at the result. So if you saw this, and then we saw a little consolidation here, we'd be getting pretty excited, wouldn't we? Look at the result. DAX 5 minute. Look. Corrective. Impulsive. P pattern. P pattern, isn't it? All right, but look at it. Down, push, down. Soaking up supply. Look at the result. Bang, with DAX. Great to trade. All right. So, what do you think, folks? So I usually end with this. So if these patterns appeal to you and resonate with your personality or style, it's important to note these basic concepts. They're best in a trending environment. They are a prominent feature of market structure, therefore works on any time frame. All right, we saw right down to a 5-minute chart. I could also show you 1 minute. We saw weekly, we saw daily, we saw 4-hour, we saw 60-minute, didn't we? Setup is fractal, okay? Pre or post breakout is a type of volatility contraction, consolidation, continuation, pattern, accumulation, or a distribution feature. This is all it is. Disequilibrium, equilibrium, disequilibrium. We want to get in when it moves out of equilibrium. Breakout as a result of the supply-demand imbalance or the volatility expansion. So if these patterns appeal to you and resonate with your personality or style, it's important that you do this. Prove this concept works for you to gain confidence. All right? Prove it up. Don't just take my word for it. Prove it up. How? Back test, forward test. Okay? Define the criteria for the setup as you see it, not I see it, as you see it. Create the playbook, your playbook of the variations, right? All of these variations that you've seen come from my playbook. Train your pattern recognition skills to be able to identify the patterns and the setups in real time, all right? Train your pattern recognition skills. We want to see that pattern, hard right edge of the screen. So what do we learn, folks? Well, we know what a breakout is, type of breakouts, why they fail. We learned that previously. What to look for prior to the breakout. Remember the context. So context is one, but also we want to see nice trending price action into the setup. Or we can see a big momentum move and a break above the level, as long as we then see the setup. So we had a quick look at how to identify accumulation or distribution. So from our VSA, let's call it, volume spread analysis, or a volume analysis, who took something away and what to look for. So we learned what are the best types, where do they occur. There you go. All right. Any questions, folks? Look into what's driving price, folks, not just the setup. Look into what's driving it, okay? Look at the way that we go through the trade reviews. You're welcome, folks. Look at the way we go through the trade review. How many times do you hear me say this, let's look at this, we see this, and it's actually then a triangle, okay? The triangle is the last thing we look at. We're looking at everything else. All right? Think of what's leading up to it. So, there we go, folks. I hope you're able to take something away. Wizard. How do large numbers fit with your support and resistance from my experience? When you say large numbers, we're talking round numbers, are we? Thanks, Sammy. Round numbers, Wizard. Yeah, look, round numbers have a bit of an influence. $1, $5, $10, $100, $50. Yes, they do. But look, equities, not so much. And look, yeah, if combined, natural support and resistance, technical resistance, yes, it clusters as well. So I just consider it just another one of those factors to take into account when I'm looking at a cluster. Wizard. All right, yeah, 80 cents, you're right. All right, you need to pay attention to it. VJ, seems equities are more easy than Forex. No, they have their own different personalities and nuances, VJ. You can spend a lot of time out of the market with equities. I'm talking weeks, okay? Yeah, trade to travel. Big round number is a psychological level too. Absolutely. $1. The Aussie dollar, $1. It's got to be, right? So, pay attention to those as well, folks. All right, folks, take care. Trade safe. And I'll see some of you tomorrow for Asia session review. So, let's go out to Dirt Road Traveller. There you go. Take care, folks. Talk to you soon. Bye for now.